All right, I have a question for you guys. Do you guys sleep with or without a blanket? If you're one of those that don't sleep with a blanket, you might be one of the weird ones. Personally, I have to have a blanket unless it's hot as shit outside, but normally my AC is cranking and it gets cold as fuck. But enough about blankets. Actually, not quite. Today, we're going to be digging into something every savvy real estate investor needs to know about, which are blanket loans. So, what the hell is a blanket loan? Think of it as the ultimate multitasker in the world of real estate financing. Instead of wrangling separate loans for each property that you own or that you want to buy, the idea is that you roll them all into one big loan package. It's like tidying up your financial closet by putting all of your property loans into one neat basket. Now, I'm not talking about lotion in the basket. Now, you're probably wondering why the hell would I want to do this? Well, there are some pretty sweet advantages to blanket loans. First of all, it simplifies the financing. You don't have to juggle multiple loans anymore. Now you only have one with multiple properties. And sometimes you can snag a better interest rate compared to taking out individual loans for each property. Talk about saving some dough. Now, you also might have lower closing costs. When you consolidate everything into a single loan, you can often trim down those pesky closing costs, which means more money in your pocket. And my personal favorite is the idea that you only have one payment to one bank instead of having, 15 different banks or mortgages that you're paying to. So it's like managing all your property payments with just one check. It's like having a remote control for all of your TVs. Super nice, right? But there's more to the story. There's always downsides. Because the loans are backed by multiple properties, lenders are going to take on a bit more risk. And if you know lenders, they like certainty. So they might hedge their bets with higher rates on these loans. And for you as a borrower, having your properties tied to one loan means you have more at stake to pay off that loan. If something goes south, it could impact all of your properties, not just one. So, for example, if, property B on Main Street, somehow the tenant has vacated without talking to you and you no longer can pay, now your income is going to drop. So it could potentially be at that DSCR level that banks don't like. Remember, banks like a DSCR level of 1.25 or higher. So if multiples of your property, let's say not just one of your property, let's say two of your properties are somehow in the shitter, that's going to mess your numbers up a little bit. So then that's going to mess up your income a little bit. So when that happens, you have to figure out how it affects your mortgage payments. If 50% of your tenants are occupying your spaces or all of your properties, and you can manage to still pay your mortgage with 50% of your rent, then great. So now you know that you at 50%, if you get under 50%, you're in the shitter. So that's one thing to be cognizant about. And I have another example for you guys. Let's say you have 3 properties. Let's say each of them are worth 200 grand. So that's a cool 600 grand in real estate. Now you're going to decide to go to a blanket loan because you like the convenience of it or what have you. Now, with the blanket loan, they're going to give you a loan for $500,000 of the $600,000 valuation. Now, and after deducting that from your property value, you're going to have that $100,000 in equity. For you number crunchers out there, using a standard loan calculator, it's going to tell us what our monthly payments are going to be. So if you do the amortization, plug in the terms, etc., you're going to get about $3,800 per month. So instead of paying those 3 mortgages for each individual property, now you're only paying the $3,800 and it's going to cover all 3 properties. And there you have it. That's blanket loans in a nutshell. They're all about streamlining your real estate investments and making your financial life just a bit simpler. But remember, you got to weigh the pros and you got to weigh the cons based on the situation before diving in. And I'll catch you guys next week. Wonton out.